All right, welcome back to our Day 3 look at DEXFI bond health. Today is interesting. The data is telling us two completely different stories at the same time. One looks like a little bit of a dip, and the other looks like a massive surge. So we're going to figure out what's really going on. And in the process, we're going to introduce a brand new, way more powerful way to track this protocol's performance. Let's get right into it.
Okay, first up, you know the drill. This is all for educational purposes. It is definitely not financial advice. Please always do your own research.
So right out of the gate, we're looking at what seems like a total contradiction. On the one hand, yeah, the bond ratio dipped down a little over 1%, but check this out. On the other hand, the total number of bonds has jumped a massive 8.6%, and that's just in the last 3 days.
So this begs the question, right? What is really happening? Is this good news or is it bad news? Well, the answer is a little more interesting, and honestly, it's way more bullish than you might think at first glance. Let's break down the numbers.
Here's our dashboard for day 3. The bond ratio is sitting at 0.0245 ETH. The fund value is holding really strong at over $1.8 million. And look at that bond count, 23,481. See, despite that little ratio dip, the fund's total value and, more importantly, the number of bonds are both growing. That's the real story. And the APR? Holding steady at 43.4%.
So here's the key takeaway right here. That small dip in the ratio, it's mostly just market noise. It's a tiny bit of impermanent loss, which is just a temporary thing that happens when asset prices wiggle around in a liquidity pool. What really matters is that huge growth in the number of bonds. That screams investor conviction. It tells us new capital is flowing in because people believe in the system.
And this brings me to the big idea for today. We've all been watching the ratio pretty closely, right? But the ratio, that's just the scoreboard at the end of the day. To really understand what drives this thing, we need to stop staring at the scoreboard and start watching the game itself. And the game is volume.
So today we're officially upgrading how we look at this. We're going to focus on what I believe is the single most important metric, trading volume. This right here is the engine that actually generates the APR for every single bondholder.
And this flowchart just lays it out perfectly. It's so simple, but it's incredibly powerful. Look, higher trading volume on the pairs where DEXFI provides liquidity, that directly leads to more trading fees being collected. Those fees generate a higher yield for the whole fund, which, you guessed it, results in a better APR for you. We're now tracking the cause, not just the effect. So, if volume is the engine, let's pop the hood and see where the horsepower is coming from. Where are the fees actually being generated right now?
Whoa, okay, take a look at this. In just the last 24 hours, the Zora pair did a massive $2.6 million in volume. KTA was right behind it at $1.4 million. These two are the absolute workhorses of the protocol right now, just churning out fees day in and day out. And even the pairs further down the list, they're all contributing to the pie. This is the activity we need to be watching.
Now, when you keep that volume data in mind, this chart suddenly makes a ton of sense, doesn't it? Why is 89% of the fund's value on the base chain? Well, because that's where the high-volume monsters like Zora live. This isn't random. This is a deliberate strategy to put the capital where it can work the hardest and generate the most fees.
Okay, let's bring this all back to where we started, that incredible growth in the number of bonds. It's time to dig into why smart money is buying right now, even with that tiny ratio dip. Since we started doing this analysis just 3 days ago, over 1,800 new bonds have been created. Now that's not just a number on a screen. That represents new capital, new people, and a growing community that understands the deep mechanics of how this thing actually works.
And this is the strategy in action. You see, experienced investors, they don't see these little dips as a problem. They see them as an opportunity. It's a chance to compound their holdings, to lower their average cost basis, and that strengthens their position for when the market really starts to move up again.
And before we go any further, just a quick health check on the protocol's operations. The wallet's holding over $71,000 in liquid assets. That gives us a 4% liquidity ratio, which is a really healthy buffer. It's the working capital needed to handle day-to-day operations and just keep everything running smoothly.
So, now that we've established why volume is king, I want to give you the exact tool you need to track it for yourself. We've put together a new toolkit to give you that same insider view.
We've built out a daily tracking spreadsheet. It's got all the core metrics we've been talking about: the ratio, the fund value, the APR, and the chain distribution. But the most important part is the brand new section, Daily Volume Tracking for all the key pairs.
And you can download the spreadsheet right now. The link is right there in the description below. This is going to let you see the trends for yourself. You can spot which pairs are heating up and which are cooling down in real time.
So if you only take one single thing away from our analysis today, please let it be this: volume. Volume is your leading indicator. It predicts what's coming. It tells you about future fee generation and where the APR might be heading. The ratio, that's a lagging indicator. It just tells you the results of things that have already happened. From now on, we're watching the game, not just the scoreboard.
And as we wrap up, just one final reminder. Investing in DEXFI bonds absolutely comes with risks, including that impermanent loss we touched on. Past performance is never, ever a guarantee of what's going to happen in the future. So please always do your own deep research. Go ahead and download that spreadsheet, start tracking the volume trends with us, and we will see you tomorrow for our Day 4 analysis.